All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Monday, February 27th, second to last trading day of the month. And gosh, last week, stocks had their worst week of 2023 after the PCE report rose unexpectedly. So the S&P 500 is trading below its 50-day moving average, and it seems that we have another wild ride in the stock market ahead of us. So how are we trading these markets? And we actually had a really good morning. We'll talk about this. But before we do this, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark Hodgson. We're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here and looking for some honest insights into the fascinating world of trading, you are in the right place. So with that said, let's take a look at the markets. And I mean, yeah, last week, worst week since, well, of 2023. Pretty
Sure,
bad.
Marcus. And it was actually the third losing week in a row for the S&P 500. So, not only was it the worst week of the year, but just pulling back for the last couple of weeks. A lot of this tied to some better than expected economic data and inflation data that is just ruining the Fed's plans.
It seems so. And this is where we had some technical support at the 50-day moving average. And we were slamming into this, but then on Friday, slicing right through this. So today it's holding up. And on Friday, the 200-day moving average came to the rescue.
Yeah, looks like it. You have that 50-day and 200-day up, and we've talked about the golden cross, sometimes that being a significant bull market consideration. We'll see if that ends up being true. At least that crossover over time tends to be very powerful. But the 200-day holding up right now is support, as you mentioned.
Yeah, we need to see because right now the 50-day moving average seems to tip over, and we don't want that to happen. So, but as I said, right now it's all about inflation. And this is where, if you look at what to expect this week, we don't have really the one super important report on the economic calendar. There's quite a few reports, and right now anything can tip the markets, but not a whole lot going on when it comes to economic reports this week.
Yeah, all things considered, pretty quiet. We had durable goods, core durable goods this morning. Now, durable goods came in lower than expected. They were down 4.5% in December. They were actually up 5.1%. This means that consumers are purchasing appliances, TVs, autos, those type of products. The spending for those items are down, at least for last month. Maybe that helping the market out a little bit today, because that's what the Fed wants to see. That's what the Fed is hoping for with these rate increases. But Marcus, the 2 year, we can talk about the rest of the economic calendar before I get too carried away.
Yeah, and I mean, this week it's more about consumers. We also have the consumer confidence coming out. We have a quite a few Fed members speaking this week, and yeah, and then we have some retailers
Yeah.
reporting, and these are the tail end of earnings. I mean, we're earnings are not really in the focus, but this week we have major retailers like Target. Let's bring it up here. So Target will report, Kohl's will report, Macy's will report. So we have quite a few that are reporting, and after last week's shocker with Home Depot that was sending shares dramatically lower. I mean, this is where we need to see, is this something where we hear from retailers today combined with the consumer confidence and the durable goods that might send markets lower? We'll shall see.
Sure, and that's the thing with retail sales and these companies reporting. So 6% of the S&P 500 reporting, and we're at the tail end of earnings, like you mentioned. Costco and Lowe's also reporting this week. But the focus is on guidance, what's expected in the future, not only what happened last quarter, but whether or not these higher prices are having an impact on the consumer and businesses, and whether these companies are sharing that they do have concerns about what's going to take place for the rest of the year. Marcus, I mentioned the 2-year yield, or was about to mention it. The 2-year yield traded at highs not seen since 2007. So with last week's PCE data and just inflation being persistent, the yields are super high.
Yeah, I mean, here I'm zooming out to a weekly chart that we see it. I mean, it's really, it's just crazy. And this is what right now the focus is. It's all about interest rates and what will the Fed do? So we do have some time until the next meeting. So the next meeting is not until, what is it, March? Let me just see. March
22nd.
22nd. So we have another 23 days. But I mean, this possible 50 basis point hike, it's pretty persistent here. And I mean, it's creeping up now at 25% probability factored into the Fed funds here that we could see a 50 basis point hike.
This is something definitely to watch. And I'm still in the 25 basis point camp, but we still have some data. Jobs are the jobs report isn't this Friday, but next Friday. If jobs remain high and any inflation data just it shows that inflation is being stubborn, the Fed might put that 50 basis point increase on the table. We'll have to see.
Right. And this is when we look at the probabilities. I mean, now no rate decreases for the remainder of the year. And I just heard this morning, I mean, that rates might stay elevated for the next 18 months. So
Oh,
that's still a long time to go.
it is. It is.
So we'll see. Hey, we got to talk about two important events that happened this weekend. The first one, we had a bet. I lost the bet and I had to send you some tomahawk steaks. And you did. You grilled the tomahawk steak this weekend. How did it turn out?
Fantastic, fantastic. Sometimes we talk a little bit about barbecue and food in the mastermind group, and uh, Marcus has been gracious with some Christmas gifts over the years, and so I started it on the Traeger, finished it off on the green egg, and better than in a top end restaurant.
There you go. That's how it's done. So this is the one major event that happened the weekend. The other one, not that major, but definitely something to keep an eye on. Warren Buffett's annual shareholder meeting, Berkshire Hathaway's, the Woodstock of, what do they call it? The Woodstock of finance?
I would say the Oracle of Omaha, but
No, no, no. I mean the event. The event is kind of the Woodstock of finance because
sorry.
everybody is going there. And I mean, Warren Buffett, being super smart, what does he do? Because everybody is coming there and everybody wants to hear from him. So he sets up a little booth with See's Candy, where he is a major shareholder in. So he actually said that, hey guys, when you're coming here, we were taking your money. Last year, you bought 11 tons of candy. 11 tons. He made $400,000 just selling candy. So
Oh my gosh, that is
it
funny.
was just amazing. Anyhow, other than this, I mean, the letter to shareholders was quite uneventful. He reiterated what he has been doing for years and years and years. Value investing. It turns out that he's sitting on a lot of cash right now, ready to jump back into the markets. And as we see right here, the stock of Berkshire Hathaway unchanged for the day. Not too much happening. Still trading at super high levels of $460,000. Is this the most expensive stock in the world?
It could be, could be. I don't know a higher price stock.
I know it's crazy. So, I mean, before we look at our positions and talk about what we did this morning, let's take a look at the markets. And I mean, this morning, after having the worst week, we opened higher, pushed up and away, but now pulling back to right around where we opened, still up 3/4 of a point from Friday.
Yeah, pretty. I mean, I know that we pulled back from session highs, but I think we're looking pretty good here, sitting tight right at the open.
Yeah. Right, let's take a look at our positions and see what is happening here with our positions. First up, CTRA. CTRA, we got assigned at 26. We both sold calls against this position on Friday, expiring this week. So this is what's happening right now. Currently trading at 25.37. My break even is at 24.51. Do you know where your break even is?
My break even, I can pull it up real quick, not counting the calls that I got on Friday.
Right.
2365 is my break even.
Okay, yeah, because you sold calls more aggressively than
Yeah.
me. I was waiting for it to move higher and possibly being able to sell calls above the strike price. So therefore, you collected a few more premium. So right now, yeah, I mean, not counting Friday's premium, that's another 20 cents. But I mean, looking good right now, trading at 25.36. So we'll see what happens. Maybe this is something where towards midweek or Thursday, we could possibly roll, or we might also get called away, and I wouldn't be too sad. I mean, we traded this when it was nicely trading in this range up here. Now it has established a newer range down here. So if we can get out, I would be okay with that.
Me too. Me too. I mean, I still have some buying power to deploy, but we've been in this one a little longer than expected. Well, I mean that's not a concern, but on average, last year we were in assigned trades for almost 40 days, so about 8 trading weeks, and that would be selling calls, eventually getting called away, and we've been in this one for a while.
Yeah. Hey, by the way, before we continue, is this helpful at all when we're walking through our trades right now? Because if it is, give us a quick like or leave a comment. I really appreciate this. So, DPZ, Domino's Pizza, we both sold the 295 and it expired on Friday worthless. So, right now, nothing to do. We just collected the premium. So, Mark, today it shows up again with the 290 or the 295. Are you interested in trading this again?
This caught my attention because we traded it last week. But this is where, as a rule of thumb, we like to sell calls on up days and sell puts on down days. The overall market is up, but also that short term, or not short term, but the support that we were expecting to hold. The stock did respond to it. It held for a little bit, and then on Friday there was a little more downside to that move, and we closed below what I would consider support. So at this point, I see it more aggressive. We were looking to capitalize on that extra volatility and reaction to earnings, but now with where we're trading at, I think there are better trades out there.
Yeah, because often what we see that we have an earnings trade. We just recently did, for example, PFV. Let's just show this. So PFV, where we had this earnings trade here, right, where we gapped lower and then moved higher, and then we're going sideways for a while. So that's kind of what we are looking for when we have these earnings trades. And I agree. Right now we have more of a slide to the downside, so I'm not interested in trading it again today. And that's the other thing, right? I mean, often people ask us for a list of all the stocks that we have traded. It doesn't matter. You see here, last week we liked it. This week we don't like it anymore, just because for what we see on the chart. And this, I mean, you have your T-shirt on. I have my mug, right? Trade what you see, not what you think. So this is super important here. That's our mantra, and this is why we have T-shirts and mugs so that you're reminded of this all the time. Anyhow, good. So DPZ, I can remove this from my watch list. This expired worthless. Then the Googles, the Googles, the Googles, the Googles. Today, up for the day right now, half a percentage point. I'm still in a position where I got assigned at 108, my break even at 103.82, and I did sell the 86 put last week for an aggressive rescue mission. And you kind of liked that trade. You took this as well, right?
Well, I was not filled, Marcus.
Oh, right, right,
So
right.
I got my shares called away. I do not have a Google position, but seeing that we are trading in this new range, that we were pulling back to previous support, I put in an order for the 86 put. I was trying to get I think a nickel more than you decided to go with, and it just didn't get down or up to that price.
Jeez, being greedy here.
I know.
Okay. Well, and now we got to talk about the most fun stock that we have traded in a while, Union Pacific. Union Pacific, this is a stock that we both traded. I sold the 197.50, I think early last week. You sold the 195. Now, last week, something interesting happened. I already got assigned. There was an early assignment. So I was assigned at 197.50. You got assigned at 195 on Friday after the close, right?
Yes. Yes.
So the closing price on Friday was what? 193. There we go. 194.02, the closing price on Friday. So it looked like today would be a good call to sell, a good day to sell calls. I mean,
Sure.
especially for you, being aside with 195, definitely a possibility. For me at 197.50, even I would have been able to possibly do that, but then it happened. This morning, huge jump, UNP over the weekend news that the CEO is stepping down. Investors seem to like it, opening up 10%. And we own the shares. You own the shares at 195, and suddenly we're opening up at 214. I mean, that's a gift.
Oh, absolutely. Bank of America also upgrading the stock from neutral to buy. Big, big jump. Not to mention, today was ex dividend day. So shareholders on record at the open are entitled to $1.30 dividend. So we received that dividend. We were looking to sell calls, and then with that huge move higher, we had a decision to make.
Yeah, because the decision was basically, okay, do we sell calls against it, or do we just pocket all the money and get rid of the stock and have a difference here of what? For you, almost $10, $9 per share. For me, a little bit less because I got assigned at 197.50. But this was just too good to be true. I mean, this is where when the market says, hey, I have a few $1,000s that I want to give you. Are you okay with it? Would you like to take it? You just say, yes, please,
Yeah,
let's do this.
there's that old saying, don't look a gift horse in the mouth. And I think that this would apply. I mean, quite honestly, you know, trying to digest it just a little bit more. When we're trading the wheel, it's a neutral strategy. We could be slightly bullish, but we're not overly bullish. We're holding this to see it go to the moon or to be in the trade for years. Instead, we're looking to collect premium. And when a stock's trading in a nice range, that's a great opportunity to do so. But here, UNP, we're looking at maybe at the money calls being worth about $2 a week, right? Now, I closed this at what was it? 212.95. You closed it at 213. So I made $17.95 a share. You made $15.50 a share. And if we're averaging $2 a week on calls, which would be fine in a normal situation, it would take about 8 weeks to get the premium that we got in one day. So do we get greedy and try to squeeze out more, or do we take a gift, an easy trade that really, I mean, why not go for the big bucks? We could always look at it again, especially if there's a gap fill now.
Yeah, and plus the dividend. The cool thing is, you collect the dividend if you were the stockholder and record at the open, and we were,
Yep.
right? And then shortly thereafter, because as you can see here, right here, let me just draw this line so that we see it on a 5-minute chart, because I do believe that we kind of timed it perfectly. Right here, you got out at 212.95. I got out at 213, and right
Yep.
now we are just hovering around there. So I think it was perfect. When did we get filled? Maybe within the first 2 or 3 minutes, because we were very aggressive in getting rid of this stock here.
I think during the first minute, we started at 214 and we were just trying to make sure that we got out of it. Yeah.
Right. So that is perfect. I mean, this was just a great gift. It doesn't happen very often. And the important thing is when trading the wheel strategy, you should not bank on it. But this was definitely a nice boost here. Finishing February fairly strong. So
Yeah.
now let's not look back on this one. So anyhow, so with the markets being up today, not too much on the scanner here today, nothing that fits my criteria here. And I'm okay with this. I'm okay with this because we do have right now, I have two open positions. For you, it's very similar because you, instead of Google, have AMD, we have CTRA. So we can look for more opportunities. And with this week, probably being a volatile week, there will be a day when we can go shopping again.
I agree. I agree. And it'll be fun to look up what the ROI was on that 1 day trade, but probably like 1,000%.
Yeah, right. I agree. I agree. All right. Hey, if you find this helpful, click on like, subscribe to this channel if you want to. And we have a few more videos for you right here. Take a look at these videos. You're going to love it. And then we'll see you again tomorrow morning.
Happy trading, everybody.